Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, welcome to Halftime Report. I'm Nigel D'Souza and with me is Surbhi Upadhyay. Hey, Surbhi, good day. We have seen the markets, trading in a bit of a tight range. We're mildly moved into the red, but otherwise more or less stable. I think Asian markets as well have been moving around.
Oh, absolutely. Not bad, right? After this humongous rally that we've had, one quiet day, slightly taking it easy, catching your breath. That's what this seems to be all about. Asia has had a good run today. So if you were comparing us to the regional markets, and there's a bit of an underperformance, for here, maybe the one trend that's worth keeping in mind is that the banks are taking it a little easy. Barring HDFC Bank, a lot of the majors like, ICICI Bank that have run up so much in the last couple of weeks, that's where there's a bit of a pause. SBI as well and Axis. So all the corporate banks, that's where there's a bit of a sort of, just kind of a immediate.
That on the news today. Then, and that's first up, let's get to a CNBCTV18 exclusive then. We learned that Mr. Jaykumar is likely to get extension as the MD and CEO of Bank of Baroda. Ritu Singh joins us with more details. Ritu, what are you picking up?
Speculation has been rife about where Mr. P.S. Jayakumar will head once his term at Bank of Baroda comes to an end. But we're given to understand from sources that the government will grant an extension to Mr. P.S. Jayakumar to continue as the Managing Director and Chief Executive Officer of Bank of Baroda for at least another year. Remember, his term was set to end in October of this year, and he was in one of those rare instances, a private banker was appointed as the head of a public sector bank by the government in 2015. Now, of course, the extension, according to our sources, is for at least 1 year, but it could be for a longer period of time. Under Mr. Jayakumar, the bank has suffered from the same ailments as the rest of the banking industry. However, in the last quarter, the bank was able to report a profit of about 528 crore rupees, but gross NPLs have still remained elevated at above 12% for Bank of Baroda. But all said and done, Mr. Jayakumar will, it seems, likely stay on as the head of the bank for at least another year.
All right, okay, that was Ritu with the latest ongoings at Bank of Baroda. Let's go across and take a deeper look at those numbers that we got. Telecom subscriber data additions numbers. Mangalam is joining in for this, not usually a telecom man, but I think it's all consumption related, Mangalam, so maybe that's a link.
It's all consumption related and also the absence of Rima, so that explains why I am talking about telecom. But tell you what, Surbhi, the data that came by, it spells bad news for Bharti, good news for Idea and very good news for Jio. So, this is June data that the Telecom Regulatory Authority releases, and that shows numbers in terms of added subscribers month on month. Jio, for the third, fourth month in a row, the run rate above 90 lakh subscribers being added onto their network continues. So they added about 97 lakh. Idea, on the other hand, in the month of May, they saw a decline of 25-26 lakh subscribers, and that has bounced back. They've added close to 63 lakh subscribers in June. But for Bharti Airtel, the woes continue. They added just about 10,000 odd subscribers in the month of June. So that is something we will have to watch out for as a trend going forward. Because if you take a look at it, the current market share where it stands right now, Bharti has just about 38%. Idea and Vodafone, remember, they will be a combined going forward. So together they have around 38% market share. And the one that is growing the maximum, that is Jio, that one has around 18.8% market share. So these are trends that we have to watch for going forward. As of now, the short point, very good news for Jio, good news for Idea, not so good for Bharti Airtel.
Okay, all right. Thanks so much for that, Mangalam. And we have the disclaimer as well that's up for you on the screen. Reliance Industries is the promoter of Reliance Jio, also controls Network 18, which owns the channel that you're watching, CNBCTV18. But from Mangalam, let's hop across to Sonal. She is joining us to tell us what brokerages are saying. Hey, Sonal.
Hi Nigel. Well, I have a long list and I'll start with why we are watching for Cummins in Tata Motors and also Maruti. That is because Citi has changed its top picks in its strategy and they have replaced Tata Motors with Maruti in the large cap picks and have added Cummins and L&T Finance into the mid cap picks. Credit Suisse has initiated an Avenue Supermass. They have an underperform rating with a target price of 1,150 rupees per share. They think that the valuations are factoring in a bull case scenario, but that is something that they are not able to see in the margin of safety, which is at the lower levels. Also, that the company is opening stores outside its core markets, and that could put some pressure on its margins. UBS has written on Tata Motors. They have a neutral rating on the stock, but they've cut the target price to 280 rupees from 370 rupees per share. JLR is something that is concerning, and they think that balance sheet continues to re-leverage, but yeah, they are not very positive on the stock. Macquarie has written on metals and mining sector. They think that the demand environment is very supportive. Global trends are looking good, but trade war and China deleveraging are the two key points which are like headwinds for this particular sector. They are their top picks are Hindalco, Coal India, Tata Steel, and Power Grid. However, they have a neutral rating on Hindustan Zinc. Macquarie has written a bullish report on cements, and that is why we are seeing some bounce back in cement stocks. They think that the capacity addition estimate is at around 4% versus 11% in the last decade. Also, the demand growth is expected to recover in this particular year. They have an outperformed rating on Ultratech, Shree Cement, and Dalmia. However, they are neutral on Ambuja Cement and ACC. Deutsche Bank has written on the real estate sector. They think the worst is behind for the sector and the demand is coming back. Their top picks are Sobha, Godrej Properties, and Oberoi Realty. And they also think DLF is improving its cash flow. So that is something that is looking good for the company. Last is Tech Mahindra, which has been buzzing in trade today. That is because Merrill Lynch has upgraded the stock. They have upgraded it from an underperform to a buy, have also increased the target price to 800 rupees. They think that the operating profit will witness a CAGR of around 21% over FY18 to FY21. Back to you.
Okay, that's a lot of views coming in. Sonal, thanks very much for that. Tech Mahindra is inching towards its 52-week high, still a little away from that mark. It's the top leader on the Nifty tally today. Well, let's get you some more corporate voices. Rain has finally subsided in Kerala after almost 2 weeks of incessant downpour, which resulted in the flood situation. We spoke earlier with N. Srinivasan, Vice Chairman and Managing Director of India Cements, to take stock of the situation and the demand outlook for cement with respect to Kerala and the overall southern region. He's actually sounding quite optimistic.
Kerala has remarkable recovery capacity. We are a strong brand there. Even when all these floods were going on one day we had no sale. On other days there was some small sale. And yesterday was almost 70% of our normal volume. I think post-Onam, September will see very strong demand in Kerala. Sale Kerala will represent maybe 12-14%. You take the west, north, east and central India, they already were at a much higher capacity utilization. Higher capacity utilization will ultimately translate into much better prices. Prices will slowly start to move up. Definitely by the fourth quarter of this year, that is January, March, you will see much fuller utilization and the prices starting to move up very sharply. From September, we will slowly inch up. We will increase price by ourselves.
Well, we also spoke to Mr. Matthew, the MD and CEO of South Indian Bank, regarding the impact of the Kerala floods. He says that he doesn't think Kerala's situation calls for a special dispensation from the RBI. Let's hear him out.
Primarily, this is a major liability gathering center for us. So 57% of our total deposits are from Kerala. But when it comes to advances, only 40% are from Kerala. And of this, retail would be around 50%. That means I would say that, of the total advances, 20% would be retail advances in Kerala. Around 35% of the agri advances in Kerala are collateralized with gold. No special dispensation would be required from RBI because the guidelines are very, very specific on how to deal with calamity. Okay. And there are very clear guidelines under the master direction of RBI.
Okay, so those were some voices, companies, banks with exposure to Kerala and how they're looking at the situation on ground. Let's move on now. This is the latest in the Unitech case. The Supreme Court has directed sale of personal assets of directors of the company for recovery of funds. Ashmit is joining in with more details. Ashmit, what is the latest?
Well, the Apex Court clearly keen on playing hardball as far as recovery of funds are concerned. The Apex Court over the last few months has seen that its efforts to recover funds by way of sale of assets have been frustrated by various technicalities in light of encumbrances, claims made by financial institutions, lack of clarity about the title deeds, etc. So frustrated by this entire process, keep in mind that in the last few hearings, the Apex Court had sought for details of personal assets of directors in an exceptional move. And today, the Apex Court has taken that even a step further, directing the committee that had been constituted by the Apex Court itself to go ahead and to auction the assets of the personal assets of directors. So this is an exceptional remedy that the Apex Court has taken as of this stage. The only clarification that has come from the Apex Court that the assets, the personal assets that will be sold, that will be auctioned, shall be unencumbered in nature. So exceptional remedies being sought here. The personal assets of directors now are in play. The committee will now proceed with the sanction of the Apex Court towards auctioning these assets. The next hearing, in this case, we understand, will be on September 11th. Back to you.
Okay, thanks, Ashmit, so much for that. Unitech, well, just a 4 rupee stock now. Times really changed over the years. Okay, let's move on to a CNBC TV18 exclusive. With new players like Future Group, ITC and Patanjali entering the dairy and the value-added dairy segment, existing players like Amul have raised concerns on the increasing availability of analog dairy products. What are these products now exactly? We learned that India's food safety regulator is examining this issue and may come out with some guidelines. Priya is joining in to explain this to us. Priya.
Well, the dairy industry seems to have raised concerns over the increasing amount of analog dairy products available in the market. Just to tell you what an analog dairy product is, it's a product made up of milk solids as well as vegetable fats. In fact, what we do understand from our sources is that dairy major Amul has written to the FSSAI on the increasing amount of duplicate dairy products that are available in the market. In fact, what Amul believes is that analog dairy products are impacting the company's income as well as farmers' livelihood. In fact, they're saying that consumers aren't able to differentiate between a pure play dairy product as well as an analog product that are available in the market. In fact, what they're saying is that FSSAI should look at modifying several of the labeling regulations so that consumers can differentiate between both these products, and these include products like cheese, paneer, ghee and so on and so forth. In fact, what the industry is also seeking is a separate logo for analog products as opposed to dairy products. In fact, several of the QSRs as well as the Horeca chains are also shifting to these analog products primarily because they're much more cost effective as compared to pure play dairy products. In fact, we did reach out to FSSAI, and sources in the FSSAI told us that they are examining this issue. They have received representations from the industry at large, and they're working on modifying existing regulations and introducing new regulations as far as analog dairy products are concerned. In fact, there could be some tweaks to the food labeling guidelines that could come forth over the next couple of months, and that's a space that we will continue to watch. In fact, we did reach out to Amul on the same, and the company has confirmed that they have raised the issue of analog dairy products with the FSSAI.
Thanks so much for that, Priya. Well, keep an eye out on a couple of stocks on the broader markets. Yesterday, we had alerted you that alumina prices were moving higher, right? Now, internationally, I'm getting a sense that, in fact, international alumina prices have moved even higher in today's trading session that compares with yesterday. Nalco had already told us yesterday that, in fact, yes, prices have moved up by nearly around 10% in the last 1 month or so. So the stock, remember, it was higher in yesterday's trading session. Now we'll have to wait for the next tender. How much will the next tender go at? The last tender went at around $580 per ton. So all eyes whether or not it can go higher from there. For the time being, the sense that I'm getting from the international market is that alumina prices, they have moved up by around 4.5% to around 5% approximately. And that's where we're seeing a bit of an intraday spike on Nalco. We'll have to keep an eye out and see what exactly does Nalco get. What we're talking about currently is international prices. Not just that metal stock, you keep an eye out on Tata Steel. That stock as well is moving lower. Now the fear is Tata Steel maybe, in fact, is there a possibility that Tata Steel has revised their bid? The last take that we had was that, in fact, no, they have not revised the bid. The street would like it if they are not very aggressive, in terms of Bhushan Power and Steel. So whether or not they revise their bid, that's the question mark out there. And that stock, after seeing a good run, mind you, is coming for some profit booking in today's trading session.
Well, the cement sector has been in focus. There were a couple of brokerage upgrades on that entire sector as a whole. Morgan Stanley sees the cement sector earnings at an inflection point. They see better times ahead in the second half of the year. Macquarie also says that demand growth for the sector is going to recover from about 4%, a CAGR of 4% in the last 5 years, to growth levels of about 7.5% as we go towards FY19 all the way up to 21. Now, that's a lot of optimism by brokerage houses. What is the reality on ground? Let's get chatting with Mr. Prasad, Executive Director and CFO of NCL Industries. Thanks for joining in, sir. Good talking to you. Now, first things first, so as you just heard in the opening remarks, I mean, on the street, there's a fair amount of optimism. Can we just start by understanding your geographical mix, which are the key markets for you, and whether you have exposure to Kerala and some of these southern markets where, floods have been playing havoc?
Yeah, mostly we are into AP and Telangana. It is more than 80% we sell in AP and Telangana, and balance we are selling some volumes in Tamil Nadu and Karnataka. And at this point of time, we don't have any exposure towards Kerala.
All right, so no exposure towards Kerala. So give us a sense about demand on the ground. And if you could help us out, what is the cement sales target that you have for FY19 in comparison to FY18?
Yeah, demand is good, and till June, even today also, the demand is good only because of these monsoons, heavy downpour and all those things, because that uptake has come down during the last 2 months. Last month also we suffered, and this month also because of this monsoon, the uptake has come down. Otherwise, the demand is good.
Demand is good. Okay. And what about sales volumes?
Sales volume, this first quarter, we have reported a sales volume of about 5.3 lakh tons.
Okay.
That is almost more than 30% growth at year-on-year basis.
Okay.
And this year, we are expected to do about 2.1 million tons of sale.
2.1. Okay.
2.1 million tons. So, sir, help us understand pricing trends. What is happening, and then once we get out of the monsoon period, how will prices move, and how would they compare to the base year last year? What is the increase that we can expect, since you're saying demand is so good?
That we cannot say anything as of now, but thing is that as of now, prices are stable, around 300 rupees level. But after this monsoon season, from October onwards, the prices are likely to improve.
Okay.
At which point of time we cannot say a particular amount.
Okay, split it up for us, sir. What is the current non-trade, your mix, your sales mix? How much of it is non-trade and how much of it is trade? We are asking you this because we want to get a sense of, and what is the price differential between the two as well?
Price difference will be about 20 to 25 rupees.
Okay.
And now earlier we were mostly into trade because of this huge demand from the government side. The non-trade, our portion has gone up share. So now it is at almost 25 to 30% of our total sales volume is going into the non-trade business.
To the non-trade, okay. And you're saying that non-trade is at a discount of around 25 rupees in comparison to trade, right?
Correct, correct.
Okay.
Okay. Sir, I just want to understand the kind of EBITDA per ton level at which you were operating at the end of the first quarter. How do those levels compare with last year? Because, I mean, basically the problem is demand is great, but your inputs are increasing equally rapidly. I mean, the way the fuel cost and, you know, the power cost is going up. So what is EBITDA per ton? What is the guidance going forward on these parameters?
So for the first quarter, we had an EBITDA of close to 500 rupees per ton, mainly because of these poor realizations and increased volumes towards the non-trade. And at the same time, as you rightly pointed out, these costs also have gone up, particularly on account of this transportation as well as this diesel price. Because of the diesel price hike, these transportation costs have gone up. And because we are using this imported coal, so there also because of this rupee depreciation, the coal cost has gone up. So as a result, the EBITDA has come down as compared to the previous year.
And how much is the fall, sir? Q1, it was 500 per ton. What was it last year?
500 rupees per ton. For the last year, March quarter, we had about 600 rupees.
Okay.
600 rupees per ton.
So 100 rupees,
So any revival in sight?
Maybe after this October, madam. As of nothing.
You were telling us about your fuel mix, Mr. Prasad. What is your fuel mix? How much of it are you importing? You're importing everything?
It's almost a 90% we are using imported coal.
Oh, will you?
Only 10% domestic coal,
You'll have to change that strategy. Is that something you're thinking about? Because, you know, without it, the rupee has moved from 67 to 70 plus. So as it is, your cost has gone up by nearly around 5%. So are you trying to rework that strategy of 90-10?
Yeah, 90-10. See, definitely we are working on that. We can see some improvement in this quarter.
So, sir, can you give us some guidance? Because there are a lot of moving parts to EBITDA per ton. It's fallen from 600 to 500. You're saying after monsoons it should get better, but there is a rupee impact. There are raw material costs which continue to be as they are. So where should we expect this number to be, say, by the end of the year, by the fourth quarter, your EBITDA per ton?
See, that way we cannot say any specific number, but the thing is that 500 to 600 as per my this thing is concerned, see, we can expect around 500 to 600 rupees. That is the sustainable EBITDA considering the present situation. And
so you've given us a good sense about the operational performance. You're saying that demand is strong, pricing we'll have to see post-monsoons, and in terms of an EBITDA per ton, we're going to be working with a number of around 500 rupees per ton. Let's focus on your balance sheet then. I remember your debt used to be around 400 crores. You'll have joined us earlier. You'll have said
that has come down substantially.
Right. You'll have done a QIP, right? Because of the QIP. So, you know, sir, you had done a QIP, so your debt ideally should come in lower. You'll have refinanced some debt as well. So, what is the debt in your books? What was your borrowing cost?
As of now, we are having a debt of about 135 crores long-term these NCDs we are having.
Okay.
So, there is a lock-in period for that, which will get completed in the month of October. So, that is a high-cost debt as of now. So that we are going to replace with a bank term loan, regular bank term loan, so which will be less than 10%.
Okay, so
that will happen in the month of October.
Your NCD, sir, you were borrowing at 15% plus?
Yes, 15% as of now.
15%, and you're expecting, so that will be nearly around a 6.5% saving, right? If you're going to refinance it to around 10%.
Exactly.
And your total...
So that will happen in the month of October.
NCDs is 135, but what is your total debt in your books?
Apart from that, we don't have any long-term loan as such. We have some public deposits of about 50 crores. So the interest is about 9 to 10% is the interest rate what we are making payment.
Okay.
Otherwise, this is only working capital we have.
Okay.
So on that also, the interest rate is less than 10%.
Okay, final question, sir. Your boards division, what's going on there? There was not much growth and the profitability got crunched. I was looking at some of your competitors. They are managing to do much better. Why is that?
You see, you know that recently we added one more plant, the third plant.
Yes.
The earlier two plants are operating at full capacity. We had some technical issues with this, the third plant.
Okay.
So that is under stabilization. We expect that by end of this quarter, so that will come onto the regular stream.
Okay.
Sir, just one question. What is your current capacity utilization? And I think you did raise 200 crores via equity. There was a QIP, is that right? Have you used that money? What have you used it for, or what will you use it for?
Yeah, that has been mainly used for repayment of these NCDs. We borrowed about 300 crores of NCDs. Out of that, we repaid 165.
Okay, and you're left with 135.